Theo, when I shared on X that I'm going to have a conversation with you and asked if people have questions, one common theme that was brought up was your exposure to China. I think you own Tencent. I'm not sure if you own any other
I
Chinese
do.
stocks. Can you share why you think owning this particular Chinese company, or are there any other Chinese stocks in your portfolio?
I do have a smaller positions in two e-commerce players, JD and Alibaba.
Yeah. So, what would you tell people who might be skeptical of having exposure to China right now? Why do you have that exposure?
Well, I think they should be skeptical of China. They should be skeptical of everything, in my opinion. And I don't think that they should necessarily follow anything that I do. As I said, I don't really like discussing my positions too much. I much rather like discussing the investment process and the actual fundamentals of how investors can go about creating their own way of investing. Um, the question of one being skeptical, definitely, and if you are not, if you don't think you can sleep at night and you are scared of the fact that you could lose all your money in Chinese equities, that's exactly what you should do. You've answered your own question. You should not have any exposure. If you do want to have exposure and you think that that risk is minimal based on your own subjective probabilities, and you have to be honest here, as I am with myself, these are subjective and not objective probabilities. Then you have to ask yourself, how much of the portfolio are you willing to allocate there, and what can make you sleep at night? So once again, as you can see, I'm coming back to the investment process.
Yeah.
Regarding Tencent as an investment, I mean, I'm looking at just really quickly, because I'm aware of confirmation bias. I don't want to be numbering all these things, because all I'm doing is pounding stuff into my own head. But it's a monopoly-like business with very high free cash flow margins. It requires no capital to run. And in 2013, Warren Buffett came out and updated his investment process. Most people didn't pay attention, but he said that Meta, back then it was called Facebook, Amazon, Google, Apple, so forth, these companies, Microsoft, they require no capital to run. What he's talking about is negative cash conversion and negative working capital, which basically exceeds the fixed assets and therefore making the overall invested capital negative. So in other words, the return on capital, the profitability divided by the capital used is infinite.
Mm-hmm.
Because you can't, if you're making 30 billion free cash flow and you divide it by minus 80 billion of invested capital, you get an infinite outcome. And so he said these are the new kinds of companies that don't require any capital, and they're just getting better and better with size, as opposed to before where size was a limitation. And they're constantly expanding their TAM and so forth. So I think, I think Tencent is that one of those companies which requires no capital to run. It produces enormous amounts of free cash flow. It has a wonderful margin. Since 2022, the management has turned towards profitability as opposed to growth-only model, which was the infancy of the Chinese internet period. Now it's more about profitability and optimization of the company itself. I'm not going to discuss too much about its moats, which include very high switching costs and network effects, and cost advantages because they run their own cloud and so forth. And they're either a duopoly in some areas with like video gaming, which are also counter-cyclical to economy, or they are cyclical to the economy itself with payment processing, where they run more transactions. I believe that perhaps, I don't know, I've heard like more than MasterCard or more than Visa and MasterCard combined or something like that. Obviously, these transactions are smaller amounts. They're smaller ticket sizes, but it's just insane. And then they have a super app, which, my wife, she's not Chinese, but she ended up living in China. She was a model there for some time back in her young days. And she lived there for several years. And she always used to talk to me about how nothing can be done in the country without having a WeChat app. You're calling your taxi, you're having a meeting with your friends, you're reading a blog post, you're searching for something on the internet, then you pay for a smoothie. and then you make a doctor's appointment, and then you store some stuff on the cloud, and you haven't left the app. Everything on your day is done on this app. So it's not really a tech company. I think it's a utility company. It's ingrained in the social fabric of the society. Obviously, there is a lot of disadvantages of why not to invest as well, including disruption and geopolitics and tariffs and war with Taiwan and all kinds of things. Video gaming is the new tobacco industry. You can go on forever. So there is a lot of confirming evidence and disconfirming evidence. And then there is a lot of issues with China. And rightfully, because of those issues, the market has discounted those stocks to the level where you yourself can weigh the information and update the information correctly by asking yourself whether you're compensated enough for the risk that you're taking and whether you've appropriately sized that bet so you can sleep at night. I can't answer that question for anybody else apart from myself. So that's kind of how I would answer that question.
Perfect. The only thing I would add here is that I feel like a common point of criticism when it comes to Chinese stocks would be that you don't really own them because of the VIE structure. But I think that perception has been sort of proven wrong over the more recent years. I'm thinking of the last 2 years here specifically, because many Chinese companies have started returning capital back to shareholders more aggressively, either via buybacks, which for some might still not be a tangible form of return of capital, which I would disagree with, but more and more are also returning actual cash back to shareholders, which I think can sort of confirm that you do own pieces of those businesses.
Sorry to interrupt you, but Tencent is listed in Hong Kong, and I've been receiving dividends for since 2022. I've been receiving a large amounts of dividends. I've received about 20% relative to my cost of capital, relative to my, I should say,
in total.
Yeah, in total. So basically, it's been cash dividends on an annual basis, which have been growing rapidly. Like I think last year was like 40% growth. The company is widely profitable. And then I received JD shares and Meituan shares, which were part of Tencent's portfolio. Not only is Tencent a company that we discussed, but it's also a venture capitalist investor, the likes of Sequoia and others who in that space. And they have an incredible portfolio. From time to time, they either tend to liquidate the portfolio in a form of getting the cash back on the balance sheet, or by doing a pay-in-kind investment where they transfer the actual holdings of the company to the individuals themselves. So I'm not sure what other people are talking about, but I've received a lot of value from Tencent. And when you look at it relative to my entry price, I've been dollar cost averaging. I didn't get the perfect bottom, but I think Tencent's up something like 70% over the last 3 years. And I wouldn't be able to outperform the S&P if these companies were uninvestable. But yeah, I'm aware of the VIE structure, and I'm aware of other structures around the world as well. That's not the only one. We don't have share certificates anymore in the US or Europe either. Our brokerage accounts hold them on our behalf, apparently, right? And if the war breaks out, good luck trying to get those share certificates in your hand as well. So we'll see whether you have real ownership in the United States or Europe or Latin America or Africa also. So I think these things are pointless, and they're all up for a debate.
Awesome. I have one final question for you here, Tiho, and it's not really investing related. I think it's a difficult question to answer, but I've seen you tweeting about you traveling the world and how reaching certain financial goals is highly individual. So what I want to ask you is, what for you makes a successful life?
No, this is a really, really deep question, Renee, and I'm not sure how much time we have. I mean, you probably want me to kind of go over this over a period of a couple of minutes. And it's such an important question, far more important question, I think, than investing. I think we have to start with subtractions, or inversion, as Charlie Munger calls it.
Mm-hmm.
I think we have to first figure out what is not a good life, Okay, and then we don't want to live that. We want to subtract that out of our life.
There's a quote of Munger in which he, I think, highlights a couple of features of a miserable life, right?
Yes, I mean, yes, there are so many.
I think is one.
Yeah, there are so many of them that you can go through. I mean, yeah, they go on forever, I guess.
Yeah.
I think people make to-do lists, right? I think you should make a not to-do list. I think not to do checklist, let's say. There are toxic people in your life that even if they're family members, you might have to exclude them. I think you should be very dubious. You should be really cautious of dubious people, and you yourself should be very cautious of entering into any criminal activities. You should make sure that you get good quality sleep. You should not live above your means. That doesn't mean that you live some kind of a frugal lifestyle. I know, for example, you recently were messaging me from Maldives, and that must have been such a wonderful experience. But I also know from following you that you live way below your means, and you're a very disciplined young individual who does that in a terrific manner. And so, as you can see, you can, like I was talking before about time.
Let me just say that finding the balance is definitely challenging, right?
Sure, and same with timing the market and market time in the market. Why do a trade-off one or the other? Of course, the balance is difficult, but if life was easy, then we would all be masters at it, and we would all have a good life. There'll be no need for questions like these. I think taking on, like we look at companies that take on too much debt and leverage. I think if you don't want that in your portfolio, you don't want that in your own life as well, right? Alcohol, drugs, and smoking, and other kinds of substances like that. You know, I'm a libertarian at heart, so I believe every person should manage themselves. But anything that's taken in large quantities is very harmful, and you'll pay the price, if not immediately, later on down the track, and you'll regret it. As a younger person, you probably might think it's nice to experiment and so forth, but be very skeptical and careful of that. I think one of the things also that people make a mistake with is forgetting their earlier mistakes. I know I have, and so many great and smart people have done this too. World leaders constantly forget history or disregard and completely discount history and forget earlier mistakes by their predecessors even. I think social media is a dangerous thing, and I think in a few decades from now, if not earlier, we will realize just how damaging this whole thing is to the world. I also don't think that you should be a victim. Charlie Munger talks a lot about this victim mentality. I think you should be a soldier. You should keep soldiering on. Cognitive biases distort decision-making, and we covered that a little bit. I think you have to be very careful of decisions. The way that I talk to my partner about it is that I always say to her, let's think about it in a simplistic way without getting into the psychological biases, because you lose people sometimes with that, you know? And also Albert Einstein said that if you can't explain it in simple terms to a 6-year-old, you truly don't understand it yourself. So I always say to her, let's think about it as two buckets. There are emotions which you can trust and emotions that you should be skeptical of, or maybe you shouldn't even trust. A love for your father or love for your puppy, it's been there. Or I said to her, your love for me has been there for many, many years, hopefully. You should trust that because it's ongoing and it's proven. It has a track record. But these temporary, fleeting emotions of anger and jealousy and envy and resentment and revenge, you might wake up tomorrow morning and think like, I probably shouldn't have said that. So that bucket there, be very careful of that bucket and don't rely on emotions when making important decisions in your life. I'm not saying you should remove emotions. As a matter of fact, emotions cannot be removed from decision-making. New research that I've been reading recently shows that emotion is an integral part and parcel in the wiring of a human being. And we cannot separate. Like Western literature believes, or at least recent literature up till now, which is getting updated, believe that to be a really prudent objective and rational decision maker, you want to remove emotions from decisions. That's not actually possible. What you want to do, as the new literature suggests, is be emotionally stable, be in a good place. So if your emotions are stable, you have more chance to consult the rational and objective side of the system 2 brain as opposed to the system 1, intuitive and impulsive brain. I think, what else would I say? I think you should be very careful of social proof, social imitation, and groupthink. I'm talking generally in life. I'm not talking about just investing. Obviously, in investing, that will lead to behavioral inefficiencies at times when market gets extreme, and you have to have the contrarianism strength to separate yourself from the herd. But in life, generally, you want to be independent. You don't need to be contrarian. You want to be independent thinker, and you want to think for yourself. You don't want to make decisions when you're tired or hungry. There's this like a famous checklist. I forgot what it's called. But if you're tired or hungry or feeling lonely or impulsive or angry, you don't want to be making important decisions in life. You also don't want to be a yes person. You say yes all the time, especially to low quality decisions. So you want to be an essentialist. I think you talk a lot about it. Like you can use Buffett's 20 slot punch card for your life as well. You know, I like to think that several, like 6 or 7 decisions I made so far in life have gotten me to a wonderful level of financial independence and a great life that I enjoy and live for myself. And I'm a very modest person. But other people might want more or they might want less. But irrespective, it's good for me. And it's only been 6 or 7 important decisions, including selecting the right lady that's beautiful on the outside as well as inside, and it would be by my side with the thick and thin of it, and having the right relationships with the right people and making a few right financial decisions and other life decisions, and that's about it. I think selling high quality assets is just not good for your life in general. I think if you hold on to some great quality assets, they will surprise you on the upside, and anything quality will surprise you. Quality dentist will surprise you. You'll have less problems with your teeth. Quality partner will surprise you. Your marriage will be far more stress-free. And, if you do well with holding a few assets that are high quality, they could go up so high that one day, in case you need it for some health emergency or something, you will have more than plenty to take care of yourself and live a good quality life. What else would I say? Ego.
I think this was great. Yeah.
Yeah, I would say ego is not a good thing. You want to have humility. I'll just finish it off really quickly, top of my head. I generally think there's a famous saying in the markets. There are 2 kinds of investors: those that are humble, and then those that are about to be humbled. And so I think start off with humility straight away. Let go of the ego. Also, the words "I don't know," I like using those a lot. Or at least if you do know, then argue for and against, both the disconfirming evidence and the confirming evidence. Don't just fall for the confirmation bias. There's nothing nicer for the human brain and nothing less discomforting for the human brain than to interpret and argue and research all the information so that it confirms your preconceived notions that you've already been holding. That's so warm and fuzzy, but it's not going to get you very far in life. Say you don't know, or if you do know, argue the other side as well so that you can get yourself out of confirmation bias. Unrealistic expectations. And Charlie Munger has stated that the secret to life, to a wonderful life, is having very low expectations with money, with your spouse, with friends, with what you want from life. I think extreme ideologies are very dangerous. Be very careful of which groups and parties and factions you decide to join, and the polarization between these groups. We live in a political time today where people are just convinced that they're right and the other side doesn't know anything. I think that's a good amount there.
It is.
Yeah, I think being late to appointments, which is like a German thing, I would say, which is very, very important, because you being German people, Swiss people, I think Japanese people, I lived in Japan, they find it extremely rude. And in all areas of business and formal avenues, it shows very low quality. So try to be on time. It goes a long way when you're early or on time with appointments. I was looking forward to this conversation so much that I joined 5 minutes early.
Awesome. All I can say here to you is, wow, that was a really long list. Probably not complete, but as close as you can get.
We would need another 1 hour, I think, because I spent a large amount of time trying to figure out what's a good life, because that's far more important to me than being a good investor. So I think I'm much better at that than I am at investing.
Yeah. And I think we can go full circles here, because at the beginning of our conversation, we said that rereading certain parts can be super helpful to memorize more of it. So I would just encourage everyone who got to this point in our conversation to go back the last 5 minutes and re-listen to memorize more of it, because I think there were some fantastic life advice in there. So
and there's so much that I missed as well. So perhaps we can cover that next time we talk.
Yeah. And just to wrap it up, I want to thank you for being willing to share your Sunday morning with us here. I certainly appreciate it a lot, and I hope that some people who are watching this are also gaining some value from it. I feel like you're definitely a disciple of Buffett and Munger. I think everyone can tell by listening to you today, and I mean this in the most positive sense possible. I think both Munger and Buffett have also been quite vocal about the power that lies in just sharing what you have learned over time with others. And you basically practice this today without receiving anything in return.
Yeah, nothing that I've spoken about today is of my own intellect and any idea that I have dreamt up all by myself. As Newton famously said, if I have accomplished anything in life, it is because I got to stand on the shoulders of giants. And Buffett perhaps is getting to that time where he might be in his last years or year, which is very unfortunate. Munger just finished his amazing journey. These two individuals have had a profound impact on me, and I think they will continue to do so, and on many, many other people. And less so with investing, and more so with how to live a good life. It's not that I agree and mimic and clone every single thing that Buffett and Munger have said. I do cherry pick. I admit that it's a cognitive bias, and I like to do certain things that Buffett doesn't like to do. I don't own a car. Buffett owns a car, so I'm even more frugal there because I like flying and I like walking. But then Buffett doesn't care very often about what he eats, and I like to eat very nice food, and I like to travel around the world. So we all have our little things to enjoy, but just the general principles and the foundations of what these gentlemen have shared with the world, they've had a profound and a very positive impact on me. And thank you so much, Renee, for having this conversation with me. Hopefully I didn't go too much over time, but I rarely do this, but if I do it, I try to do it properly.
Awesome. I'll just say nothing to add, and thank you, Tiho.